Good morning. Happy Monday. What's going on, everybody? Another week. All right, one last sip of coffee. This morning, the unsurprising return of tech futures is coming from last week. What happened? Well, we had rising bond yields. Spooky. The day after the Fed came out and confirmed our ideas and really solidifying what we understand about how the economy is going to be rebounding and going really into the future, going to 2023 where we have some rate hikes already on the board. Whether or not we actually meet these expectations is one thing, but it doesn't really matter because we trade all of these ideas right now. That's how we're always future looking. We're always trading a future value, not really a value right now, which is of course why growth has always done well, right? Growth always does very well under any circumstances. And then during sort of these times where it seems like, well, if we're going to get the boom right now, then we understand those more value-oriented companies and the investment and trading ideas that revolve around not going to future growth, going to value, are going to be paying off more because it's just, again, we're not really trading the value of companies, right? We're not like truly trading on this idea of fundamentals or solvency. We're actually just trading on liquidity and flows, right? If there's money coming in, then price is going to go up. That's it. That's all we're trading on right now, right? And so with that idea in mind, we do get some of this, the other back end of it, of the value side of saying, well, if the economy is doing well right now, then these companies are going to do well right now. And so just that idea alone, whether we're truly looking at revenues or not, that's just a reality. That's how it's going to be. And so we trade accordingly. So even though you and I, and using this method, we don't really trade on those ideas, it doesn't remove the fact that we're trading the flow of it. So it doesn't change anything. So we stay in the lane of that. We just follow the money, right? We have to react to price. I'll say this week, if we take a look here on the NASDAQ, we'll look at pre-market action later. If we look at where price is right here, we talked about this break over here. We ended up getting rejection. We kind of confirmed that we're still within a little bit of a consolidation here. Now we've been consolidating for quite some time. You could say, or you could call all of this a rally coming out of the election, which all of the market has, but tech obviously has been a little bit more volatile and has not been trending, and has not really been accepted as, oh, you could just go one way. Even though we do accept the fact that tech is likely just to always continue, and I would still say it's going to put the most points on this year, right? Any companies that you consider to be growth, they'll likely be the highest growing tickers on the market, and that's just the reality. And that's kind of why I made a comment last week, and I kind of said it in the little write-up I did as well. It's like, when you think about some of these companies, and I'm going to use the Apple chart as an example. This chart is disgusting. It's terrible, and I shorted it within here, and it worked. But that's really the only trade I see on here anyway. I don't see other shorts. I don't see other longs besides over here when we were actually getting going. And I don't know where the trend lines are, but we'll ignore that. You think about over here. Are you going to bet against this? Are you going to bet against Apple right now? Are you going to just bet against it right now over just taking the mindset of, okay, Apple is likely to continue to go up in the future, so I'll be okay with taking the low trade down here. Like, you don't even need to take a trade, but are you going to bet against it? The answer here is usually, even if you're not going to take a long trade, you're not going to bet against it. So the market's not going to bet against it. Who's going to... Yes, the chart's disgusting, and nothing's really going very well on the mega cap side besides the Facebook trade we made. But no one's going to bet against this. That's just the reality. the meme of stocks only go up is true in its own right of prices are just always going to continue to appreciate, but also in the sense that Apple is always sort of innovating and always growing, right? It's a $2 trillion company right now. It's likely going to be a $3 trillion company. Are we going to really bet against that? You're quite literally being a contrarian in every single moment if you're trying to, on a long-term scale, go against these trends. Yes, you can take trades, and we trade charts, right? You in between, you can take different trades, going long and short, like when we've been shorting tech over the last month and a half, 2 months. But that doesn't really change the overall long term. And so when we're in this moment where, okay, no longer can we really short, we don't really want to go long. We just need to be keeping our eyes open and ready for the next phase, right? We understand this is not very good right now. We understand that, but that doesn't mean we shouldn't be on our toes, ready for the next move, which would be sort of the premise of what I wrote last night, is that what if it's different this time? What if we're not going to go into some sort of not correction? I do believe we're going to get lots of corrections in the future, but I'm talking about like a bearish sort of market. There's this idea that we are going to swing back into recessionary forces, maybe beyond the economy, since we see the economy's rebounding, but maybe have the economy lead right now and have the market pull back overall and sort of into a bearish downtrend. I don't find that to be the case, and so I'm going to continue to be risk on the market, which includes everything, right? I believe the entire market will continue to trend to the upside and be risk on, as we have shown through everyone's buying of just everything all the time. There's some areas that have not been as bullish, but I mean, we're just risk on all the time. Look at sort of the things that are being bought outside of even the equity market. People are selling bonds to go buy Bitcoin, to buy NFTs, all of this kind of outside speculative sources of price. If we're just continuing to speculate and there's fucking money out there, right? There's money out there to be spent, then I don't see why it would stop. The economy's doing well. What are we all of a sudden going to do poorly just because we see that, oh, it's possible for interest rates to rise in the future? Of course, that's always the possibility. Now, how that lines up with how much money the Fed is still supplying liquidity, how much fiscal policy, how much, even when you just remove fiscal stimulus, if you just think of government spending, this government does not have a worry of inflation. They're going to be spending money out of their mind. They're going to be buying on infrastructure. Why are we going long infrastructure? Is just because the chart looked pretty? No, there's a fucking real idea of the government spending trillions of dollars on infrastructure and government programs, right? That's just the reality. And usually that's a good hedge against inflation. That's usually a good hedge. You go into real estate, infrastructure, these value ideas, physical, real things. They don't usually change poorly with inflation. Sometimes under volatility of inflation, up or down. But we're betting on these ideas because, well, there's going to be a shit ton of government spending. So if the interest rates go up and there's still a ton of government spending and QE still is going on, then is that really going to cause sort of a deleveraging that's going to cause the entire market to come down for the foreseeable future? I doubt it. It doesn't make... Yes, under historical circumstances, that would be the case, but that would almost mean that everything that has happened in the market has just been completely wrong. That would remove all of this. It would mean that all the earnings and everything you see with companies is basically just not true. The idea of growth is just not true, which we've been doing basically forever. And so you would have to refute everything ever if all of a sudden the math wasn't going to work, which again is if interest rates increase to levels before 2008, you would basically have the math is quite literally, you would take 50% of all profits from companies if interest rate rose. Are we going to say that interest rates are not going to rise because of that statistic? Or is it going to be because that statistic is going to change because of some other policy shift? Like, yes, if you raise interest rates, you will have 50% of all profits. But is the Fed really going to let that happen? Is this the Fed that's going to do that, where they increase interest rates and have all profits by 50%? This is a fucking America. It doesn't matter if it's the Fed or not, and they're outside of bureaucracy. They're not going to fucking do that, right? And so we've been 0% interest rates since 2008. We're going to be, this is going to be it's almost unforeseeable how long we're going to be in a low rate and high spending climate. And I think it's going to be past the day I'm fucking dead. So I'm not even going to think about it. We're talking about such a long-term cycle of when we're going to get out of this. We are going to be doing this, and I joke about this before. We're in a 13-year bull run since 2008. 13-year bull run. 13 years since 2008. 13-year bull run from over here. Look at this fucking chart. 13 years. Now, here's COVID. Now, COVID was an anomaly, right? And we still took care of business over here in the equity market, in the markets. Now, the economy is now rebounding, and it looks like it's going to be doing better than before eventually, right? Which is you would expect. But think about this. Since 2008, nothing is going to stop this idea unless we just had a full policy shift and we keep getting a signal that it's not going to change. The only thing that's going to change is there's a possibility. Now, I've talked about this before. The Fed is the greatest, sort of the greatest proponent in the greatest sort of contributor to wealth inequality in the world. The amount of the money that the Fed supplies and in the way they function, it just causes income gap and wealth inequality. That's literally the fucking reality. Every country, about 70% of the world uses the dollar. Like 70% of all the money supply is the US dollar. Everyone just uses the US dollar, even fucking China, right? Even China. Every single time the Fed prints more, it causes inequality to rise. Now, do you know how you counteract inequality? And now I'm not saying that all of a sudden we're going to wake up and be good people. This does have to do with trading right now because it's important. It's an important sort of political shift that's going to have to come, and we're in the middle of it, which is important to understand. So that's why I'm bringing it up, because it does have to do with everything we're trading. So the one thing that can counteract wealth inequality in the way that it's just parabolically going up, right? The rich, look how much richer the rich got during COVID, right? Adding like how much, like $1 trillion to the top 10 billionaires, some fucking ridiculous number. It's not that bad, but it's an insane amount of a gap being created. The way it changes is through government fiscal policy and the government officials that we elect, right? And the policies they put forward. Look at fiscal stimulus, this $1.9 trillion plan that we just went through, that was giving money directly to Americans and those that don't have it, right? Through unemployment programs, through stimulus checks, and then on the state level, giving states that don't have money and that need to help their citizens through wealth programs, giving them money to then support them, so that it's also going through sort of an organized structure of spending that can then pinpoint from on a state level, not even just from federally. And so we sort of have these tertiary programs set up, and then also through, PPP, through these spending programs on infrastructure, those things that just happen right now. That's a sort of a revolutionary idea, and it's also important to understand. And Ray Dalio has talked about it before, and I'm going to try to connect it to that because we've been talking through some of the things he's talked about. There's a lot of things he's a little extreme on. He'll go onto the long-term debt cycle and say war is the end of the debt cycle, which he's just fucking insane. Like, that's just such a crazy concept to go. You're going too extreme. What I would say, so he was saying that the debt cycle leads to sort of the boom, the bust, and then you come into this revolutionary process of going into like a war because one of the countries is like getting fucked by the other country, so it needs to go to war with them. I don't see that really being the case. I don't see, some country in Europe saying, you know what, this is insane. Let me go fuck them Americans up, taking all my money. That's not going to happen, right? That's an extremism. That might be a religion thing, not an economic thing right now, as we're becoming a global society, right? Everyone uses the dollar. everyone is relying on these ideas. Let's just be realistic. But what I would say is that we have talked about this. There is this idea of the revolution from the people being so fucked by their government that they sort of rise up, right? And we've seen this in the past where the people of this country rise up. There's some sort of revolution and things change. Well, did that not just fucking happen? Did we not just get a big fucking change with the way now we've had some extremism and we've had some pretty back and forth ideas, and we're going to always go back and forth. But did we not just have a change where we are now fucking paying American people? We just passed stimulus. This is the third technically plan that we've passed, and we're giving money back to people, and we're looking at it as sort of a good thing. And even Wall Street wants the government to give people money and to support people and to spend more money. Spend the fucking money. The Fed is saying spend the money. Wall Street's saying spend the money. The people, you guys, are saying give me the fucking money. I'll buy some new Yeezys. Make Kanye West a $7 billion man. These things, what's important to understand is that never in history has the federal government, those elected officials, and fiscal policy, never in history has it ever been so intertwined with the Fed. There's never been a point where the Fed chair is working with the federal government and elected officials so closely before. In that sort of, and also I'm going to use this point, and this is like something that people don't agree with on me, but Powell has been very political. Powell, since when he started, coming into COVID, has been very political. Think about all the times he's been begging for fiscal stimulus to come out. That's never happened before. It's an independent body. It has nothing to do with federal government or elected officials or the fiscal policy that comes. But how many times has he gone on air and asked the federal government to pass plans, pass stimulus, and to do spending that intertwines with monetary policy? They've done it multiple times, and the biggest shift, I will say, is the changing of the mandate of over 2%. That is a world that change is going to change everything that happens in the world, because it's always been thought that we can't print more money to solve our problems because of inflation. Look at what happened to Rome. Rome was in the same spot where we are right now, and they just started printing money, and then all of a sudden it fucked them later, right? Because of inflation. We've seen it multiple times. We're in a very different spot right now where we're finding out that, we don't really have physical money. We're not tied to gold. We're not tied to physical products. I'm not talking Bitcoin, you fuckers, okay? All of our currency is basically digital. Yeah, it's like there's cash somewhere. And we're gonna literally we already have something coming up in July where they're gonna talk about the new sort of US digital currency, which again is the exact same currency. It's not gonna take over Bitcoin or something like that. So I don't see that becoming a problem. But the reality is that we have a fiat money that we almost have no inflationary pressures, and inflation might actually be a good thing at this point. And we are obviously getting some signs that we can control it and that spending is not going to hurt it. So you could just have unlimited government spending to solve every problem, borrowing from the future, and we can always grow past that. Right now, if you look at it, yeah, the debt is growing to GDP, and we keep spending money from the future. But if you look at even the equity market, the way the equity market is betting, and also the bond market, and here's where I'm like going to bring it together. Wall Street bets. You know what's really funny? Wall Street bets is in line with the bond market in their thinking. Both of them think the same thing. They both think, and I'll just say retail traders, retail and Wall Street, both think the exact same thing. And that's that the Fed is going to solve every fucking problem. And guess what? The Fed has solved every fucking problem since the start of COVID. 2 weeks into COVID, we already had QE started, pumping everything. Every single time there's been a problem, the Fed has always gone there and spent the money, readjusted the balance sheet, been there to continue to allow things to increase. Why would they? Again, they're in a spot where they do not want markets to get ahead of themselves, if that's not going to be the case, we're literally in the spot where the Fed is stating that there is not some sort of future problem. You got to think about, if the Fed is going to stop their program and they're going to have to deleverage, and that we're going to need to pay this debt back, and that the federal government's going to need to pay the debt back, you say it earlier. You don't let things run off and then all of a sudden have to do it, because it would cause a fucking instant crash, and it would cause a lot of people to fucking probably die because of it. If all of a sudden the Fed comes out and says, oh, listen, we got to pay this debt back right now. If the federal government needed to pay the debt back, we would all be fucked. We would literally be fucked. It doesn't need to happen. It literally doesn't need to happen. And they continue to tell us that, and the market continues to pump. Look at the market. It just depreciates based on that $120 billion a month by the Fed, and the fiscal policy coming out that's continuing to provide sort of a barrier and support to the wealth inequality that's being created by the Fed. That's not going to stop, guys. It's not going to fucking stop, and we keep doing this. And the reason why everyone is in agreement is because Wall Street and retail traders are in agreement, and investing ideas and spending is in agreement, because monetary policy and fiscal policy are in agreement. The government's going to be working with the Fed. This shit's not going away. The best thing you can always do is to bet on the future. And we're going to keep betting on it. And we're going to keep trading. Every single time you think about one day and like 10 minutes goes by and the market's coming down, this is where it's important. You just need to remember what's going to happen next week, the month after that. Don't bet against it. We can short in individual times and understand, but there's no point of always having some sort of emotional connection to the fact that we could come down at any point, and it could just be bad, right? You're like, well, maybe this is the end of this, and yeah, I expect corrections, but guess what? We do know when these things happen. They're usually around specific events that we all correct, because we're all doing this together. You're not by yourself. The market doesn't operate individually. It doesn't, it takes more than one institution to cause the market to pull back. Pullbacks are good. That allows us to get in. We buy low, sell high. Our entire strategy is about we're small, and we can get in and out of positions and time a little bit better than the next guy, right? And we can directionally trade a little bit better than the next guy. We don't have to spread. We don't have to straddle every situation. Yeah, we're going to need to straddle some things in the future when we get into some pressures, just to bet on the volatility and not specifically direction. But everything that we know about where we live and how the market is reacting to monetary policy, fiscal policy, and all of these tail risks that we don't really know what they are yet. They exist, but we don't really know the risks that are involved. All of them still lead to the market increasing, because that's where we are. That's where we are as a people. And I think it's really important to think about everything that happened here, and to get this surprise here of COVID. Is this going to happen again? Probably not the same surprise ever again. And no, I don't expect this to happen. This again is an anomaly, but that's important to understand is how quickly we came out of this. This was the shortest bear market ever, if it was a bear market. Instantly, the Fed starts coming in, and it's not going to change. Now over here, it was very kind of difficult to trade, but now, if I had been in hindsight, we would know that, okay, the Fed's not going to stop, and it's been since 2008, and QE is still going. We're now in a place where fiscal policy is coming out, and the government itself is spending. It's not going to stop, guys. Like, we're talking, it's going to be going for at least another few years, as the Fed has said. But the reality is, it's going to go much longer than that. It's going to go at such a length that it doesn't affect any of your decisions, because you're making decisions on like the minute level. What do you care what happens in 10 years from now? Like, some of you are like, well, what about like from 10 years ago? Are you fucking investing your $1,000 into some long-term strategy? Fuck off, right? You're literally trading short-term. All that's important is whether it's going to be going up or down. Is it bullish? Okay, yeah, it's bullish, so I'll buy it on dips. Great, that's it. That's all you need to know, right? You trade what's bullish, opportunity cost, that's it. This shit's not going to stop for a long time, guys. We're talking about a very long time, okay? And there's some very smart people out there. And if there was some sort of tail risk or some sort of problem that could occur from what we're doing right now with increasing the debt nonstop, if there was some sort of in the math, if the math existed, that this would fall apart. Yes, it's difficult to manage the inflation because you're sort of stuck between two issues, which is like pension defaults, corporate defaults. If the interest rates remain low and inflation rises to a level that we can't control, there's some problems there. But I'm going to bet on the Fed being able to manage that, and for the people themselves, you and I, we're progressive people. We like to look to the future. We like to be better. We're going to continue to we're going to push forward policies that spend it on us, spend it on the people, and actually allow for that. The problem would be the wealth inequality, where now the money's in the wrong hands and now everyone's fucking dying and shit sucks, right? I don't expect that to happen in the future as much as it happens now. I think things will actually get better. So that's the opinion part, but it doesn't change the part that if we were gonna go into some sort of downturn, the Fed, we would all have to be aware of it, because again, things don't just randomly happen on their own. The market doesn't just, it's not like the market's like a natural thing and we're all watching to see what happens. Like, oh no, the market's down today. No, we'd all have to cause that to happen, right? That's not where we're at. Okay, folks. I wanted to set up the week, because I think these are things that are going to be important this week. Hint, hint. Hint, hint. Either way, we're open to everything. Open to everything. We made a Facebook trade last week, guys. Let's be honest. I know I'm all about the value right now, which is going to continue to be a great play. Because again, it also sets up as hedges to this idea that if we are going to have some sort of downturn in the equity market because the economy's booming, but there's an interest rate problem, they're going to go to value. That's literally where they'll go. And so we're in such a good spot to be at the base level and to have the ability to go attack growth. You know, most of you made a ton of money from trading Tesla last year and from trading these growth companies like Zoom, Peloton, these COVID winners, Etsy, right? Yes, we made a lot of money doing that last year. Do you really think that just because right now we've had some different pressures, that we're not all looking to those ideas, that we're going to start to grow again in some of those places in the future? Yeah, the price points are ridiculous in the idea that we have. But as long as these ideas remain, that we're not going to have some sort of, I don't know, we're not going to have the Fed gives up on us and the government gives up on people, then everything's going to be okay. Right? We will be looking for everything. And also KSU, we can't talk about the KSU news, but KSU did get some good news. It's up 15%. Also Cal. Retail stores. Could you imagine not being in any retail stores? Yikes. All right, pot stocks getting some moves. Tesla, we're getting that first gap. Now again, okay, here's the thing we need to talk about before we get into individual tickers here. Okay. The thing, so I was reading some stuff. Listen, guys. I think you've all seen the chart. Maybe someone in chat can bring it up. There's the chart of almost all of the gains that happen in the market happen when the market's not open. After hours and pre-market action. Almost all of the gains happen when the market's not open. So any percent increase or decrease happens in after hours, not during intraday. So again, if all of your trading only consists of intraday and you're never pushing over overnight or over the weekend, then you're not truly gaining or making any moves ever. You're just trading like this very finite amount. And again, you're not going to truly make anything off that. I'll have to find the chart later. I'll do it during lunch or something. But the reality is you have to be willing to push trades longer than your fucking day, right? And I think we've had some recently. We've had some ideas that we need to. No, of course, when there's a day trade, we take it. And if we get fucking 100% on a trade in a day, we're not gonna be like, well, I should push it further. Oh, I lost it all. No, it's again, there's opportunities, and if there's money on the table, we take it. But overall, we should never be really looking to make a trade unless we can push it over, because again, that's where all of the gains are. That's literally where the gain is, right? What otherwise, it's just you're just kind of you're literally just day trading, and again, if there's no value to be really had during intraday, then it doesn't make sense to be orienting your trades that way. Now, recently we've gotten into this volatile period where it feels like you have to do that, and it's too risky sometimes to go overnight. You just have to stay consistent, go with it. And I realized, just like looking back at the last couple weeks, that it seems like there's been a lot of that based on like you guys, based on retail, based on the street and everybody else, and sort of the back and forth mentality, because no one wants to carry anything. Everyone's like worried about what might happen the next day. And so again, that's where I sort of brought this conversation here. Just listen, you make a bet, go with that shit over time. It shouldn't be like a 1 day thing. It should be, again, a swing over multiple days, and you want to be able to push that further and further, because that's where the true gaining is. That's where the true value is. If you traded Tesla last year, did you just fucking day trade it every day? Or did you actually just buy it early at a low point and sell it at a higher point later on for fucking hundreds of %, right? And you made multiple trades, yeah, but not just fucking in a day. That'd be insane, right? So again, you want to be getting some of these gains, stop fucking scalping it, stop day trading it, make a trade. And again, we came to this year saying we're not going to be a pussy. Sit in that trade and get some gains out of it. Squeeze every gain fucking you can out of it. Strangle that thing, right? Don't be sitting around, right? All right, we got 1% on the Qs. It's good for Facebook, and that's good for some of our intermediary tech ideas that we got on. Again, mega caps kind of suck ass right now. Besides Tesla getting this number here. By the way, I am pissed that Kathy went ahead and put a $3,000 price target on Tesla. It's just a little bit. It's a little bit of like a desperation move, because they haven't been getting a flow, and I don't think it was necessary. I think that we're just in this consolidation, and I think it's good for tech in terms of the healthy price movement. And like I said, I'm even excited for this week to get some growth trades in, just as we all return to being risk on. I think there's been so much pressure based on yields and worry, but I think everyone's going to say fuck it and just go risk on again, which means we'll be getting some growth trades. I don't think it was necessary for them to. They obviously don't think that, and they don't even have any numbers to back it up. It's not like when I post a chart and then there's like a ridiculous price target, but it's just based on the trend. It's not like they even did that. They just kind of threw the fucking number out there. I hate that, and I think it's again another example of saying things that they don't need to be said. Just keep putting Tesla on your fucking into your fund, and that's all you need to do. Otherwise, again, you're putting in a new sort of layer to it that now is causing more decisions to be made on sort of a qualitative level instead of quantitative, and I think that's not good. So I'm not a big fan of that. And I like Kathy. And I like everything that's sort of developed based on sort of this flow mentality, and that whole ETF and everything they have is based on flows and this future looking thing, which I believe in. But fuck, man, I'm gonna stop saying dumb shit all the time. Just like, again, it's just to get retail going, but that's such a temporary thing. If everyone buys a bunch of calls right now, that's a temporary thing. Like we've proven, if they come off, nothing happens, right? We need long-term looks. If you're saying 3,000 by 2025, then we need some fucking long-term growth, right? Not this right now boom, which is what they're looking for, because again, things don't look very good. Okay, this is a great trade here coming from the support on SunPower. So again, we're looking at some of the clean energy. That was our first sort of look, our first sort of area in which we were trying to get back into a growth idea. The other big thing last week was those bio plays that we were looking for a short term sort of oriented trade. GRWG pot stocks continue. So again, we bought from this low over here. This is now a ridiculous gain that we're gonna have to look back on a little bit and see what the fuck we did right there, because Jesus, that's 75% on the underlying of GRWG. That's a few hundred percent like every other day. So yikes. Okay. Let's see. Z with the bounce back. Very nice. Okay. Retail stores continue. UMC finally coming back through here. I know we talked about trying to get these specific semiconductors back on. TSM being the other. AMKR is also coming, but this has been the most bullish one. This looks like upside breakout territory coming up into the 30s. We'll continue to push these ideas. I think it's important. Continue those ideas. Yeah, I mean everything's risk on, but we're looking for where's the best place to put the money, right? Where's the best place? LC continues. That might be a take profit. Hold on, let's do that right now. I'm just a little too short term on that one. Take the gap. Keep the long term on there. Okay. Zoom. We talked about Zoom enough. Some of these interesting trades that I would, those of you that have not looked at the charts last night, that's okay. I'm not mad at you. I would look at the ticker names I put in there and connect the dots a little bit. You'll find a story. There's definitely a story from the tickers I posted from this weekend. There's absolutely a story. So looking at Pepsi and looking at these ideas and some ideas we've been talking about of sort of go through the motion, go through the steps of what we've been looking at, supply chain wise, distribution, transportation. Think about like last week how much we fucking made on transportation and these ideas and how they're going to continue into the future. We're operating in sort of an economics capacity on a lot of these things, and I think it's really important to introduce some of that and use it in the now, not even like in a growth of like, oh, well, this will be a good decision for the future. Like, no, I'm talking about trading right now where these things are going to happen, and we keep getting them, right? If we have confirmation that something is working on one idea, like retail stores, how the fuck did we know that retail stores are all of a sudden just going to start moving? How do we know that the value is just going to come up the next week, right? And make that trade, right? These ideas we can use as confirmation for other ideas. If you solve one problem, you can then use that problem that you solved to solve another one, right? That's a great way to solve problems, is if you don't know how to solve a new problem, if you know what the question is and you know what the problem is that you're trying to solve, then use an old problem that might be simpler or that you've already answered and solved, and use that to then solve the new problem. If the new problem is, well, what should I fucking buy and what should I trade? Use the old trades. Use those old understandings, and especially if it's in a newer capacity that is directly involved with some variables of a new chart, right? Holy moly. Okay, pot stocks. Good job, guys. Oh my god, Roku's up 3%. Oh my god. Could you imagine buying at the low here? Oh my god. Over almost 7.5% already, guys. What a great technical play. Good job, guys. Who called that? I think it was one of you that called that. Definitely not me, because that would be a completely, that'd just be wrong. Great technicals there. What was the trend line in here? I don't know. Unbelievable stuff there, guys. Good job. Those of you that don't know, we bought Roku at the low for no fucking reason. So, and you guys are all convinced that I knew some inside information. But would inside information literally mean anything? Does it ever mean anything? What would that change? If you know that earnings is going to go up, does that mean that you should bet on price going up the next day? No, that doesn't fucking make any sense, right? It doesn't matter. We're just buying at the low end of the range support, right? That was all that was. That was all that was. Buying support. That's all we do here. Buy some support. Sometimes it works, sometimes it doesn't, but it works a lot more times than it does. And it doesn't. TSM, okay, semiconductors getting that move. It's kind of a. We're just kind of got everything slowly trending up. GoPro through the trend line is kind of spooky up here. Again, I talked about it. This is like the new start to the trade. Whole new chart up here. It's just going to get a little wonky up there. All right, let's take a look at the averages. S&P, 25 basis points. Tech, almost 1%. Pulled back a little bit. A very good spot coming off support here. It's going to be very interesting to see what the trend is this week. I'm betting on everything this week. I'm expecting everything to climb. The Dow in a very good spot from its pullback from Friday, right? The take profit from this move. Again, to expect that this was going to keep going up in a straight line, you're insane. I think some of you do this all the time where it's like, this was already insane that we got this many days straight up. You need pullbacks in price movement. That's how fucking stocks work. Have you ever seen a chart that goes in a straight line? No. It doesn't work like that. It ebbs and flows and pulls back. You're insane if you expect things to go up in a straight line. This quite literally reached my target, guys. On this chart, at least. On the ETFs and everything. Yeah, I talked about 34,000, but to act like this did not actually reach its mark is insane. And this is what you need for price movement, right? You need price movement. So keep that in mind. The small caps, I think this is a great move. So small caps actually did the same move that the NASDAQ did on Friday, right? This sort of 75 basis move, 75 basis point sort of gain on Friday. And again, small caps are more value oriented, but these did, I mean, there is some growth in here, but these did very well in sort of the regional bank thing. And I do like where this is here. We'll see if it keeps trading on this trend line. There's still more opportunities in there. And again, we want to squeeze every bit out of that as we can. Important to, right? It's important to squeeze everything out. And again, we might be, we went through the rotation phase of money came into value. We'll need to see more flows came in. We got the momentum, and then we got some take profits from there. Now it's to see whether that continues or not from the pullback, right? If more momentum comes in, people buy the dip. That allows for healthy price movement, new buyers. But also, we understand the market's likely going to be risk on, as, again, yields are going to be popping up and down. But we've already proven that this is just the idea that this is the reality we exist in. It doesn't mean we're all of a sudden going to stop doing what we've always done, which is just, again, trending towards the upside. Like, it's just a new reality that there's some new things out there to think about, but we're not going to stop trading, right? We're not going to stop buying shit. So it just causes a little bit more risk, and again, we're going to pay for the risk. That's what we do. We pay for risk. Pay for the risk. And quite literally, the risk is just, what is the risk priced by? The price that we're paying for risk at any point is just based on the flow, if there's inflow, outflow. So if there's flows coming in, there's less risk, and then the liquidity involved. If there's plenty of liquidity, well, then there's not as much risk, which again is the same as flows, but they could be different things at any point, right? You could have something that's very liquid, so there's not much risk, so that's the price you're paying. If there's a lot of outflows going on and it's not very clear, there's still going to be higher risk because of that volatility, right? Which is why even though things have been, you could have like growth downtrending, but it's still expensive to go buy some of that, right? It's technically expensive because the risk involved. Risk makes price go up. ZI another day. Ooh. Okay, waiting for where are we at here? Viacom, another week and another uptrend. Unbelievable. Okay, we'll see. And let's bring it over to the SPY, watch some intraday moves, see what the feel is. We are 17 minutes in. What we got for candles so far. All sort of climbing up, kind of a wide spread. It's a wide spread for the SPY right there. That's good. We like that. A little bit of volatility. And our bets from last week were betting on just a higher gamma. That was it. Betting on higher volatility. Because with options, that's literally all your prices. This is IV. Oh, IV went up. Well, your premium went up. That's the premium level. Expecting bigger moves. That's all our bets are. Oh, I'm expecting a bigger move next week. All right, what's climbing here? Okay, let's talk about the energy thing a little bit. So again, we have crude continuing to sort of pull back a little bit, right? It's important, dude. Hold on, let me show it from this angle. So we've had crude pulling back, right? And now I talked about this week coming into. Let me put it on like this angle here because you can see what I'm talking about is the downtrend is still here. So coming into this week, we put a bet on over the weekend that energy was going to come back up, right? It's going to come back up. So it's still in a downtrend. It needs to come back through, but we're going to sit in this basically until price makes a move, right? Now, yes, we're downtrending. We're downtrending here, but we understand that this is actually tied directly to the crude over there based on what we've seen. Now this opened up a little bit lower, but again, we're not average. We don't trade averages other than for a long-term understanding, which again, at this point, I would have to imagine everyone already took profit because this was a long fucking time ago. So I don't think that needs to be brought up. But over here, expecting this move to come back up, it's important to see the timing here. How I just brought up and how I even just said, I thought crude was actually down. It's up 1% right now. This is going to follow. It's going to follow. This is down. This is down. Crude's up. This is going to follow that. This will follow that. Look at that move. Now, we got a little early on this trade over here, but it's basically at break even right now. Basically at break even because we bought that whip over here. So we'll be watching this. This is okay. This factor of the value side has definitely changed because it's getting incorporated with a different economic idea. I even took off, I talked about it taking profit at the end of last week on the natural gas short, right? Because again, the crude, the way it was moving, we understood that we were going to be sort of switching the script up, right? That's just where we were at. And so this is a whole different idea. As soon as you start to incorporate other markets and other ideas specifically into the play, it starts to again remove some of what we understand as being why it was bullish to be in the first place. Do I expect this to go higher? Absolutely. But we understood that this was going to be a longer transition because of the way that oil was moving. Is oil going to go up in the future? Yes. Isn't demand peaked? Yes. Yeah, there's going to be less fucking oil use. Yeah. But it doesn't change the fact that in the now, the economy is getting going. It's going to cause, again, when you're trading futures, you're trading future value, but not like 2030. People are not buying oil for 2030 right now, right? They might be buying a little in the future. It's not the same as equities where we're like, you're betting on Tesla to be a trillion, worth trillions in 5-10 years or something, right? Completely different game, but we understand it does dictate things a little different on a timing wise over there, right? Disney coming off the trend line here. Do like that chart. Do like that. The moves within here. Very consistent. We'll see how much some of the clean energy and semis do this week. We'll see. Betting on them. Betting on them. Also be interesting to see now we sort of have swung back. So think about it. A lot of the contracts expired on Friday, right? We've we've expired a lot of contracts, which means we've now removed a lot of the idea of the gamma swing that was happening. Now again, this does not cause this. They again are neutral to each other. What did I say last week? That this was gonna be completely sideways. Completely sideways here, and that just because all those contracts came up does not change the fact that now all of a sudden the market makers are going to sell everything. No, because they cancel each other out. All those contracts that are in the money cancel out all of the underlying shares that are there, right? They just cancel each other out. I think that's a great example right there. That opening tick was right where the closing tick is, as expected. So that hypothesis is proving to be correct. So I think that's an important thing to remind everyone of just because all those contracts can cause a squeeze or a pullback when that squeeze sort of gets sold, that's where it is. Okay. MWK with a violent move. That's a violent move right there. Moon. Okay. Let's see where we're getting into the next phase. We got some digestion happening. We're coming into 10 o'clock. Coming into 10 o'clock. I think everyone's ready. You guys ready? Based on what we've seen so far, it's we're ready to get going. We are ready to get going. I like that right there. Let me just... I think we're confirming. We're going to have a lot of double bottoms. A lot of double bottoms this week in some of those continuation triangles, like the continuations that I posted from the weekend, and then a shit ton of double bottoms this week. You can fucking guarantee that. We're going to be preempting them, which is why we've been buying at the lower end of the range on the support, right? Even if it's not true support, just the idea that it's within the move here, it's so important to recognize that, right? This is completely different, but all the charts that are down in here, coming into the support, we're taking them, preempting everything. I'm betting on risk on mentality. Sue me. They were already made last week. And what's really nice to remember is that we've gained a ton on the value play, right? A ton on the value play. And as we've taken profit on some of those, yes, those new funds we're going to be putting it wherever the flow is going to be going and wherever we get the biggest gain. But that value side of things acts as a very good, you can call it hedge, but it's not a hedge, a good complementary trade to any new growth trades we make because they'll cover the holes of each other. They will cover the areas of weakness and some of the risk involved with each. Because if one has liquidity problem, the other one will have liquidity. If one has a flow problem, the other one will get the flow. It's good to have both there. And that's where, yeah, you're trading a little bit more averagely, but you're also protecting. You're protecting both trades. Not sure what's happening there. Let's go. If we break through this here, we get through this half mark, 391.5. I would like for this to get back up to the trend on the SPY. I have a weird day. Still just managing trades from last week. Haven't really had anything stand out. Most of these, again, we've already sort of been a part of. We'll see. Not really sure what the take profit is on some of the weekend bets here. Maybe right now, take the weekend bets off. Let me see. Where is this? Facebook, we continue. We can keep pushing that trade. Interesting. Okay. We'll be watching for 10 o'clock. Watching for 10 o'clock. We just keep kind of climbing on the averages. Everything climbing on an average, but not really specific moves that stand out. So I think that's important to mention. Small caps getting hit here, which can be a leader. We need to keep this in mind here. This can lead the market. This is mostly on the small. Well, I mean, they're all small caps. This is mostly on the regional bank side, travel side, taking profit further. Which again we could be getting some flows again, bouncing back and forth. But again, what happened last week, in the week before? We do this with yield, where yields rise, everyone goes to value, and then the yields come back, and then everyone goes to the growth side. We've been doing this a lot. It's important just to continue to maneuver around that idea and not let it shape you. Don't let it shape your mentality. Just maneuver with the trade. Common sense trade it. Definitely the bank side. Definitely the bank side there. The major banks right here. These are not running though. This looks to be a good time. What I'm trying to figure out, is this the best time to buy right now from this pullback on some of the, again, the average is climbing up, but for individual tickers that we're looking to enter, might be the best time to take those entries. That chart is fucking wild. Let's go take a look. Oh, okay. That's what you got. That's coming up. Okay, well, large cap value is definitely doing well. Definitely doing well. Small caps, not so much. Banks, not so much. Okay, am I ready? We finally ready? Can we get this to continue? Can we get the mega caps just trending at least? And not all sporadic? Google in the middle of fucking nowhere, Cloud City over here doing nothing. Facebook, the only one moving. Only one with a trend, which is why it's the only one we're trading. Microsoft, I mean, whatever this is, but it is tied with the Dow a little bit, tied with at least some movement. Some movement. Tesla getting stuck again. Again, that the problem with doing that is, again, here you go. You get this gap, and then you have to get back into the swing. So, there's nothing wrong with it swinging back down here and continuing. But again, you're doing this. You continue to get this problem with anything that affects gap wise or anything else, where you lose time on this move. You unnecessarily gap, take profit, and then come back. Now, I don't know if it's going to fill all the way back down. It doesn't really matter. It does cause things not to be bid, which this kind of ticker needs momentum. For us to go trade this, we need just the momentum to be signaling that it's going to be going. If there's not a movement, then we can't really do anything, right? There's literally nothing you can do. And so that's kind of the problem with like something here. We can't do anything right there. Gotta wait now. Have to wait now. If it opened from that bottom of support, then that's a whole different story, which is why on a lot of these charts we've taken those trades. BJ chilling on the trend line. Waiting for some of those to still break through. Charts from last night. Just Pepsi so far. Pepsi so far with the move. We look at everything else. HBI get hit with the rejection. BSIG, same thing. ROL opened the exact same, but it's in the middle of nowhere, so this is a good spot for it, actually. Great buy there. XPEV looks to be the same. EFX is the exact same on the trend line here, though, so support buy there. Domo, same idea. Support buy. Again, off the flag will do that to you where you're actually getting a support buy. ITCI broke through the pattern. KDP in a very good spot for it here. That's when you have that much interaction. Again, KDP basically say basically the same as this sort of food and beverage side of things, but transportation, distribution. Why? I don't know. NDAC, everyone's favorite. NASDAQ, obviously this is the tech average, right? No, NDAC is just the financials, the ones that operate the exchange. Again, we've been talking about tertiary financial companies. There you go. W, Wayfair, again, retail, similar to our Amazon, Etsy, Peloton before. Now it's sort of stuck in this consolidation. This chart's kind of ugly, but definitely is it is what we see there. Box with the move. Trend line comes in 24.30. I do want to be getting as many of these low range trades as possible. If it's trading sideways as well, those are possible. Not as good as the movements that are similar, like the double bottom moves, but they are possible. He's still on support. Yeah, Netflix, we were looking a little earlier, coming off the support over here. This is the kind of move. These are going to be a lot of double bottoms. This is a double bottom here if it does come through. There's going to be a lot of those where we are. We're going to be looking for those. And again, I'm not taking on those kind of trades. Again, those are just technical trades that we're trading individually. They have their own velocity. They're making their own move. Those kind of trades are where we live and dive. We live and breathe. Okay. CRM, we'll see if this finally gets going here. It's a part of our Dow trade that got absolutely whacked. But it's a good spot down here. We can sort of remove We don't even need to remove it. This is actually good for this move down here if this comes through. See how that does. Free Willy looks to be killing everybody. Okay, this kind of thing right here is exactly what I'm looking for this week, where semiconductors, we bet on semiconductors the end of last week, coming for this week. This is the kind of thing that leads the growth sector because there's some understanding. So we have all the supply in here. This is the kind of shit that you want to be breaking out of, and it would pay. It would just pay. So I'm gonna be looking for something like Nvidia here, the more volatile side. Just to get some exposure to, right? Arc still just getting smacked. Me. Dollar's just been trading flat. Again, talked about this last week. People just don't have any clue. So you can see there's not even any movement now. There's just there is no correlation to anything over here anymore. So again, there's no such thing as even hedging or going into safe haven with the dollar because it doesn't even make sense anyway. So we're now getting not even any movement coming from really the idea of last week that, okay, so if the dollar's rising, that's because yields are going up and because of inflation expectations, not because people are exiting the market for like risk reasons. So it's actually risk on, okay. And then, oh, wait a second. So there's also a possibility, though, that money's leaving treasuries and that money's going to outflow from equity. So we need some dollar. We need the dollar to be higher to protect us. So also, though, why would I want to buy the dollar if the dollar's going to keep going down because money supply keeps increasing? So that would suck. Let's just do nothing. Usually you'll get movement because there's swaps coming in and, there's some sort of, okay, I'm going to be entering equity market. Let me get the dollar. Get out. Not seeing anything. So, I mean, it might be actually a better thing than we're seeing sideways trading over there. Might be better. K is almost at the 6210 spot. We'll see what the interaction is there. There's a lot of supply in here, but then that allows for the next move, which we're gonna need to climb through. A lot of these charts do have these levels that we're gonna need to climb through them, right? We're gonna need to climb through them. I mean, I'm quite literally just waiting for things to get going. So, my bets remain. I'm betting on the market this week. That's for sure. Betting on the market. That's for sure. That means green. Lots of green. Not to say the averages are not green. Do I want to take advantage of this here? Probably not. Probably not. Stick with the... Again, we've already sort of converted from... I mean, not fully, but we've converted from some of the smaller scaling to higher scaling, cap size-wise. So I think that's an important thing to also keep in mind is what's sort of changing on that side of things. We've had further rotation into the large, like if we're considering this some sort of value idea, we've had conversion into larger cap value companies like the Dow, right? That shift I think is important. Now this did happen here, right? That's the regional banks, and yeah, we got to take quite a profit on them, but we're not looking at it as the same way over here. Because again, events are not lining up. We had the Fed day. It's important to realize again what we were trading around, the things that we were trading on, how the market reacted. Things we have to adapt, right? Things are not always going to stay the same. Do I want that? Maybe BRKB here. Another example of some of the big boys. And are we? Is it? What's more likely that this goes up or down? Probably more likely it goes up, right? Interesting. Interesting price movement so far. It's oops. Here. Brian mentions Tiva. Hmm. Hmm. Now we of course took this big Tiva move over here and are expecting upside today. Today the day. Spot's just not moving enough. Come on Dow. Seems to still be some digestion coming from the tail end of last week and also from the Fed day. A lot of take profit on this side. I think we wait. We wait on some of these kind of trades. Don't know if we should buy these on support. I talked about this over here that this, for instance, since of where it is, could come down to the trend line, which would be a gift. Again, if there's like overselling, I talked about this on Friday. I expected Friday to sell most of travel, sort of like over here, this overselling, but we never got it. We actually never got it, which I did find surprising, right? I did find it surprising. And I talked about it a little bit in the way it shifted the way that I thought about the trades and the way I was going to take the trades. So now we're getting this take profit day today. And so where this price is, again, is sort of showing this. I think we're going to go back into the same idea of over here. If we hold these supports, then I will take probably those support buys, just not immediately. Just not immediately. So again, we keep coming into support on all these charts. What's TGI doing here? TGI, I mean, again, it's so easy to look at some of these charts and be like, oh, wow, this is down 5% here. It was up 7% on Friday. And it's still, look where it is here. These are so hard to read. And the only thing, again, the only thing we can do here is these charts are the charts that are bullish like this. TGI is fucking bullish out of its mind. Aerospace and defense and this whole thing is so bullish, and the way it's been moving, the way it's holding the lows in here is so bullish. You can't go to the short mentality here. You have to keep your eye on the pullback buy here. It's so important to do that, and I think there's a lot of examples we have of this. Unless the chart, the bias has changed, you have to keep it the same way, and you can't go into the other mentality, right? Sometimes it's not going to work. Sometimes it won't work, right? But still, if you're holding the rules, if you're holding yourself accountable, where if you buy and price does not go, if you're buying something, price should always go up from there. And if it doesn't, you should be getting stopped out, right? Sometimes you will get stopped out of these ideas where, okay, the pullback, we're fucking buying it. We're going to buy it. Doesn't always work out, right? Absolutely. But it doesn't mean you can then go to the short side or anything like that. Unless the bias changes. Unless the bias changes, this is not a bias change. This is not a trend change. The one candle here, and it's still up. It's still up from the Thursday close, right? So when I'm looking at these, I'm keeping that very very much in mind because again, you buy this here from the support, and this climbs back up. That's just another 100% trade that was just given to you for no reason. There literally no reason. This is more like someone is, if you think about, now this could be sort of a 2-bar reversal and could lead to further sideways trading or downside for the moment. But what this really is just some take profit that money's looking to go elsewhere in the short term. Doesn't, these are not long terms. Not long terms. Hello. We'll see. We'll see. This sector has performed so well. So again, we need to be ready for pullbacks, take profits. What the question is for how long does it consolidate that upside move? Some of them are not. It's not intuitive. It's not intuitive because some of them have gone. Some of these trends have been significant and without take profits, without consolidating. Breakout, consolidate, breakout. Where the fuck have the consolidations been? It's a part of healthy price movement, right? And we add on those pullback opportunities. Important to remember that. Ford, I'm not exactly entirely sure on that move. I think I'm going to be buying that right there. This may not lead to further upside this week, but it will in the next fucking 30 minutes, that's for sure. So, I think I'm going to be getting there. Let's see. Need some move. Let's see if we can get that. We get this to pop through here, then I will. Take that whip buy. We'll see. Maybe it needs to come into this whip down here. No, I think this is a good spot. I think this is a good spot for it right there. We'll see if it breaks the low. It's whether it's going to break the high or break the low. If it breaks the high, I'll take the long. If not, then I'll wait for the next time. Should be like right here though. Oops. Nope. Going to come into here. Looking for where this spot is. Looking for like a whip buy on this. This is just too much again. Just too much again. You look at the market. No, it's just too much again. Too much. Everything's climbing to the upside. That's kind of unnecessary price action once again. It looks like small caps. Unnecessary. Gonna be buying that. Gonna be buying that. Let's see. Maybe right here. Okay, the lowest point. Let's see. 1245 would be great. 1240 is the next. 1245, 1240, and then 1230. But I think this is going to be a little bit more dependent on here. Okay, 1245. That is the 1245. 12 and a half. See if we can get a nice little day trade to swing to long term. Take them when you see them. I'm gonna be buying that. Brian says Faye, LOL. See what's going on. One of our favorites. But are we finally going to break out of this trend line that we've been looking at for fucking ages? Now we did it over here. What did we get cucked on over here? This was just yields. That's just the yield dime. It's a great spot. We're betting on this. Looks very much like the growth tickers that we are looking to bet on. It has this upside move here. It's not as low, so it's more bullish. Trending towards this way. We have a trend line break here. This got cucked by yields, which doesn't really make any sense, but it did. So I get tied into the NASDAQ average. Get tied into the growth average. This was at, wow, this was at the end of the day. This looks terrible in here. I don't remember, I didn't look at this chart on that day, that's for sure. You wouldn't take that breakout there because of this price action. You would have had to take it from support. Downtrend, hold support. Thursday, down. Which was the yield, which was again was a yield thing. On Thursday, growth came down. Friday was bid. Doable. Breaks the trend line is doable. From a technical standpoint, I mean, it's fucking so long, though. I mean, it's going to take forever. Take forever. See? I don't, what the... This shit was obviously pretty funny. Obviously pretty funny. Ooh, go daddy. D-D-D-D-D-D-D-Y. Kitty. That's a really interesting spot right there. I think that's a must. That's just a few bones right there. Okay. Okay. Index up 1% already. Take that. We'll take that. Anything on this? Not really. Even with a take profit, there's nothing here yet. Maybe actually. Okay, top of the list. We continue. Lit just came in. Excuse me. This is spooky here because this could just, again, we have a lot of I think we have a pretty good understanding of some of these charts in this capacity. A lot of breakout potential there. Lot of breakout potential there. And healthcare continuing. Ooh, that looks good. Nice, nice. I do like the Netflix move. Oh god. Gonna get paid. That looks like it's just ready. This chart is so... This is one of those silly charts for sure. The price points. 500 this week. Go daddy. Okay, K, we just broke the 6210 we're looking at. Now again, what I'm looking for here, I don't know this again, you break through, pull back in, bounce on the support. This could come today. We're very similar to this part here. Whether or not, if this comes up to the 63.63 resistance today, I would probably transition this. I would probably take the profit there because it came so quickly. On a chart like this that's not expected to make that much of a move. And again, when you make a trade, you're betting on you're quite literally just betting on more volatility the next week. This is volatility that was not priced. So excuse me. These healthcare ones. Oh, monsters. We get the monster move on. Do the other trend line as well. Let's go bid. Let's go bid. Let's have some fun here this week. The people want to have some fun. They don't like to buy and watch their shit go down. They want to see it go up. Go Apple. Get some apples in there. I didn't talk about Apple this much not to put some bit of Apple on, right? I talk about Facebook just to watch it. NVIDIA? Put those NVIDIAs on. Oh, baby, doesn't that feel good? We'll see if we break through this trend line. Little hesitant to say that this is going to go right now, but ready for it. Get the trades in. Get the trades in. Watching. Watching again. Team is probably a pretty good spot there. And I mean in the sense that the price does look to be heading to the upside there. I think everything is. I mean, I said this earlier. I thought we were ready. I mean, the average did go, but it's not really. It just looks like where it's supposed to be. It's not really moving. It's not really true intraday movement. Just from before. This is great so far, but come on, come. I don't think we need this to catch up to us, so this is fine. This is just some further. I mean, the problem here is that this is just gauging. Some of the regional banks put like 30% on, so it's the take profit today makes this average look very strange, which is why this looks so weird. But all of these, this looks like it's bad and down, but all of the tickers that we looked at, in the Russell 2000, the small caps all looked great. They were actually rallying through here. So some of this again, the average is not the best. So we're not looking for the average here. Wonk. Oh, it's an interesting spot right there. Probably. I don't know if I want to buy all those support buys. DI, we continue. Talked about this. We literally just talked about this. Take this trade. Why? Why did we take this trade last week? We bet on more volatility this week, like this. That's why. Look at us. We're going to get in there, and then we're going to be in the trenches. What are we going to do? We're going to take the profit. We'll say, fuck that. Not going to dick around in there. We'll see where we're going to go. Maybe we have to wait a day to, again, you can't just decide when the top is. Oh, this is it. Nope. You don't get to decide when the high is. You don't get to. So you have to fucking react. Maybe you have to let this close, and then tomorrow, if it starts to sell from open, then you can get out. But you can't just decide right now is when you get out. Yeah, I want to probably get out and take this gain. But you can't just guess when. Otherwise, you'll be doing it on every trade. Come on, let's go. Come on. So again, I'm just kind of risk on everything. So I'm betting on us, folks. AVXL 4.5. Watching this Adobe move. Pepsi, we're up over 2.5%. That's going very well. Disney, watching that. It's looking like it's heading to 2.5. Everything looks to be continuing to climb here. Don't really see much slowing down. The pricing does look a little strange because we had this weird pullback that came a little late. I'm not really sure. But I'm expecting everything to climb. So the worst thing you can do, again, is to price watch. So some of you are still fucking sitting there and picking your ass, doing nothing. So, and then picking your teeth, you sickos. Not a good time to price watch because you're going to get fucked this week. Which is why we did everything last week. Again, this is such a good example. I talked about this the week before. You can't just wait until the moment. You have to capture it. There's no reason not to take those trades from Friday. Did some of them not pay off? Absolutely. Get some trades that get stopped out this open. Absolutely. But the gains are significantly more, right? You didn't have to do anything. You could have waited till the very last minute of close to put trades on Friday. And here we are. Why? Because it's just hard to go put them. Look at what just this open here. It was really kind of wonky. It was actually a little wonky to try to put new positions on. Like I had to wait 20 minutes, 30 minutes to put a position on. It's a little weird. Not very fun. You know what's really fun? To already be in positions and just to be making money. Making money is great. I hate losing money. Brian says, making what? Brian says, hey man, really don't want to work the day job. Can we get some trades out here? What do I make? What are we making? ZI, let's fucking go. Again, don't preempt it. Just those of you that are in this position from last week, you don't get to decide. Okay? I'm not saying that taking profit right now would... Okay. Again, I'm not one of those people that's going to tell you that you're going to be fucking sad you took profit. Absolutely not. I want you to push your winnings when you can. But like I always say, if you're going to fuck yourself, don't go fuck yourself. Just take the profit, right? Just take it. Level on Faye. Let's take a look. 2051. It's a little wonky. Let's see. 2051. I don't even see it. You're talking about this one wick right here? Alright, probably not. Probably not that one wick. The problem is that these are all lows. These are all like the support lows. So you want the highs, right? You want the highs, so probably 21. 21. Yeah. Here, just put this in here. 21 is a good spot right there. You got wick from over here, but you want specifically sort of the high. So see the highs over here as well. Now, here's another quick lesson for those of you that don't know. When we're looking for support and resistance, right? Horizontals. You want price convergence, which we usually look at as an average around price, but specifically when we're looking to create levels, we're looking for wick touches, right? Which could be a low wick, could be a high wick. But what we then do is, if there's, let's say there's two levels that both have 4 wick touches or 5 wick touches, what we're looking for then is for resistance, we want more high wick touches than low touches, because that means it acted as a resistance. This doesn't discount the fact that just a wick touch or price convergence is a level, right? Because it can act as support and resistance. But specifically, when we're looking for resistance, we do weight higher those high wicks, like over here, this wick, this wick, this wick, in here, because it acted as resistance before. Now, if price gets on top of this, yes, we'll turn it to support, right? If price is on top of this over here, this will be support as soon as it crosses it, right? But it's a good thing to note when a level acts as a stronger resistance or a stronger support. This level I just put in at 21 is a stronger resistance. What about this down here? This would be stronger support, right? Because you have all these low wicks in here. And looks like we can adjust this one a little bit, but basically the whole average through here, right? Same with up here. What's this? This is a resistance. It's never even acted as support, right? Wick touch, wick touch, wick touch. Resistance at 23.75. If price gets on top of it, yes, it's support. As soon as price climbs on top of this, it's support, right? But when we are looking for them, we do want to specifically gauge the level and weigh it based on those high and lows. That's a pretty good one right there. Again, over here, we're just watching the trend line. Now, this got cucked before. This move here, guys, you don't take this move as soon as, when I was talking about earlier, is this is going to take forever. Why is this going to take forever? Because it's been consolidating and doing this forever. If it broke out over here, fine. Since it's over here, it's going to take a long, it's not going to just like go put 100 points on right here, okay? It's not going to do that. I promise you it's not going to do that. If you think it will, I will sell you whatever calls you want up here. If you want calls up here, I'll sell them to you. It's going to take some time, right? Even if it breaks out, right? This over here, completely different. Completely different. What done? But nothing. Oh boy. Let's go, let's go. Got places to be, people to see. Give us the points. Okay, let's get going. Let's get going. Capturing just about every single, I mean, literally everything. So gonna look to, they're all climbing, but obviously gonna look to be a little bit more specific. Just being directional in that it's the upside, of course, will pay. Just being directional is going to pay. You're taking risk to bet on direction. I would like to be more specific though. Like before, we were very specific on value. This week, I just expect everything to go. We're gonna react based on what does get moving the most, and then look to create a larger position in that area. Not exactly. We're just not getting any real sense of that yet. That's the problem. All of it direction being shown, but still doesn't look good over here. The arc just not getting the flow. Again, ties down all the arc trades. eBay from last week looking very good still. I did like this trade a lot over here. Chart is just again from everything from the 5th. An important date. Didn't take the trade over there because that would be just ridiculous. Hey, but Don, you're buying on support over here. Come on, man. You got to buy that. You got to get those. You got to get those, Don. You got to buy it down there. Come on. Look at the gain you could have had. Some things we bought that looked like this, but I'll just keep those ones. GRWG up 75% on the underlying. Looked just like this. Bought it down there, but it had true support across an entire sector. So I'll take that trade and that win over this one, I guess. Okay with that. TME, we continue. Trend line. 32, 33. That one feels good. That one does feel good. Some of these charts that are down a bit. Let's see. Anything that could be made of use here? Just didn't really whip very much. Oh boy, here we go. Are we doing it? I don't think so. Some points though. Some points though. We're at least proving on the tickers that have sold a bit here to start Monday, which Green Friday, Red Monday. We are showing that they're willing to buy on lows that sometimes are not even on support, just based on timing. It seems like the removal of volume is actually removing from the supply side while the demand stays the same, causing prices to climb here. You're seeing that where coming out of open, volume is coming down, and through that volume coming down, it's leading to price increasing, which means that again, yeah, there's more supply than demand right now, but as the volume comes down, it's more demand oriented, which can mean melt ups, right? Because if volume is already removing just the supply side, then it's very likely you get melt ups here. Because it continues. It doesn't really change during the day. I mean, the volume stays low from here till through lunch till close, and so if we're already seeing that now, that's something to keep in mind. Because again, I think we need to be expecting further upside this week and take advantage of some of these ideas on a full equity market perspective. Risk on, looking for some individual things, but if we're going to get larger discount than others, I mean, anywhere, we're expecting price to be up, then we want to be taking those where we can, and specifically on the ones where we're expecting more volatility. Because again, that's what will get us paid, not something that doesn't move. Yeah, it could be up in value and price, but we need something that's going to move more than right now, right? So some things that have been kind of dicking around for a little bit, which is why I'm kind of growing on some of the growth trades coming in right now, because again, betting on higher volatility, that they were volatile to the downside and then stopped, and then now they're looking good for some more action. Yeah, Lumen's gonna be fun. Lumen will be fun. Again, this whole that whole sector is at yeah, that's 1530. Um, this whole sector has been so strange. Not even just specifically the sector, but like everything that has to revolve around again Viacom. Think about some of the names. This is a part of that sector. Viacom, Discovery, Com, Fox, right? These are these are all like the same idea, and they're all doing the same fucking thing. They've just been doing the same thing. So yeah, it's definitely getting moving. Nice call. Started to move a lot more. Uh, See, this is the kind of shit that I'm looking for. Like this, that just looks like coming into this week. Now, last week wasn't really no. This week though, something like this, something like this. How many times are you losing that bet to the upside? Not many, not many. That looks like it's going to 250 SNPS. BJ through the trend line. See what we get here. Now, BJ, remember what we did with retail stores. All the retail stores made their move. Now what we're seeing is a lot of the retail stores that didn't are catching up, right? Just like what we see in other sectors, the sector convergence, they're catching up. They're catching up. A good example of one, this could definitely go put some serious points on catching up to the rest of the sector. Important to remember that. Take advantage of it, right? Take advantage of it where you can. Tickers that look good, like on a technical basis, they look like they've got some chances there based on like a support buy, a break, but then also have that sector behind them. That's when we go, okay, let's go take that. It's not always the same, changes every day, might depend on yourself. Who fucking knows? This looks good right here. Another double bottom. Again, this is exactly what we're looking for. What is this nightmare? This is terrible. This is terrible. Betting on volatility, that's for sure. That's a trade and a half right there. You break this, yeah. All of these. God, it just you know what it looks like is that we're. Oh God. Oh God. Buy everything. Who cares? Doesn't even fucking matter anymore. What does it even matter? Just buy anything. Fucking doesn't even matter. Literally doesn't matter. Just buy something, but don't buy the average. Don't buy an average, right? If after the Great Recession in 2008, right? If you bought at the market low, right? Do you want to buy SPY or did you want to buy Apple? You bought fucking Apple, or you would have bought Apple in hindsight. You would buy the thing that's going to give you the most points. Average is not going to give you the biggest point gain. Individual tickers will. Just buy any of them. Don't fucking matter. They'll all beat the average if you're buying with direction and it actually happens. Almost looks good. Doing well here. I mean, everything looks pretty good. PEP 138 interaction. This is going to get fucking gnarly today. I'll be honest with you. That this should not have happened here. So we're already getting a gift. Again, I mean, yeah, it's one thing that I post the chart and then it moves. I mean, I didn't expect it to move this quickly. So, we take our trades at open, but this is a little. This right here signaling that these two levels are exact, right? Price trades through levels very quickly, right? This next one is even larger, which means even more movement. I don't know. Suspicious. But we like money. We like money. I'll take it. More money, please. Please. Okay. Yep. So buying everything that, again, all those charts that we were looking at that have those support that have been fucking beat to shit, that have been trading sort of flat, not much volatility. We're betting on volatility increasing this week and into next week. Those are all the charts we're taking like this, right? All of them. Doesn't matter if it's growth, value, doesn't care. I don't care what the name is. Tell your mom, don't care. Those are what we're doing. Everything like this. See all this? See all these? These double bottoms? Told you there's going to be a lot of double bottoms. We bought some of them last week, right? Things like SPWR, these things like Facebook coming out of it earlier, right? Semiconductors, intermediary tech service providers, right? Some of the communication side of things, which we kind of just looked at. Brian mentioned LUMN, but we bought like Roku at that low. Those kind of trades that we've already preempted. And then today, things on support that are coming out right now. We're just betting on more volatility and movement. These have been beat up for a while. I'm not betting on that these are like great. And they're all going to get fucked by yields again. Absolutely. But I think I'm a little, we're a little bit quicker than the market. A little bit smaller than the market. I can get out. I'll take my 100% run. Move to the next. There's just too many opportunities. Way too many. Way too many. Take them all. Betting on fucking everything. For this week, right? Again, this is scary right here. This just looks like so many points right now. Ugh. Bad liquidity. Apple. Oh, don't. It's coming, folks. It's coming. You're getting a lot of points. Good luck. SunPower getting paid finally. Finally today, which again, we talked about this low here. The fact that it's holding here is what I'm saying. We're getting paid finally because it's going to continue. See this trend? It's not coming down. It's, when it's not going to be stable, right? There's a lot of examples of this where it just kind of, you get these whips that open, this shit movement, shit like this, broadening. This is just trend. That's just trend. Good stuff, guys. Sure. Give me one moment. Already. It's 11 o'clock. 11 o'clock. Let's see. Anything notable out here? Oh my god, what is this malarkey? Okay. uh wow. So let me talk about this a little bit. Um so obviously last week we had also back last year in 2020, the Fed basically made it so they changed they made it so that banks didn't have to follow the supplementary leverage ratio, and so they made some changes to like give flexibility, right? And it allowed them to basically lever up and be a little bit more risky to sort of withstand some of the COVID pressures, which is why they did so well trading, right? They wouldn't have been able to trade the way they did without really the Fed just letting them do whatever the fuck they want, right? Um, they just kind of levered up considerably, and obviously it shows itself. And so it was supposed to expire the March 31st. So it's coming up right now, and obviously last week the Fed told us that they weren't going to change that. It's going to expire on the 31st, and it's going to go back to banks need to follow the leverage ratio, right? They need to like go back to the regulation, right? This was a measure to basically the whole idea of when the Fed did that was basically like babying banks. Like banks are a bunch of babies, and so here's a little a little room for you guys. Do what you want for the next whatever amount of months until March 31st, and then you're gonna need to go back to being a fucking bank and growing the fuck up. Like it was basically just uh, I don't even know. But either way, banks are pussies. Jamie Dimon came out and from J.P. Morgan and saying that listen, you know, they're they're gonna let this expire and we have to go back to normal bank regulation. I'll tell you what, we may not accept customer deposits. It's too much money. And we don't know what to do with it, and we're gonna have to turn it away. So people may not be able to deposit money into their bank accounts. You know what? We're not gonna be able to take it because maybe you should just let us keep being unregulated. Can we just do what we want? Unbelievable. Unbelievable. Yeah, listen, yeah, we might have to turn away customers because yeah. Sorry about that. He said, direct quote, please take your deposits elsewhere. God, they're such pussies. Unbelievable. Unbelievable. Who knows? I'm not gonna read any more of that. They're just babies. Like the thing is that the way the supplementary leverage ratio works is that as the Fed continues to increase its balance sheet, right? Banks basically do the same. Their balance sheets continue to increase, but what's going to happen is it gets to a point where if this continues, then they'll just be over leveraged and their hands will be tied because they have to follow regulation. They can no longer really do anything, which is like technically what they're saying, which is like, well, we literally can't even take any more customer deposits because we have too much capital and we'll be over leveraged because it's considered being risky. And so it's like, what do you want us to do? This basically removing the ratio allowed us to just do whatever the fuck we want. But it's silly to act like, oh, we can't just do something different. Like you can change things. You can literally change things so that you can keep growing your capital as a bank while not being over levered. Like it's so silly to act like you can't. I just don't even understand. They're literally just freaking out. Just like in the bond market, all the bond market selling, it's just freaking out in reaction to the Fed. That's it. That's literally all it is that the Fed's gonna let inflation run. Well, fuck you guys. We're gonna sell all the bonds. How do you like that? Like it's quite literally that kind of being a baby behavior, which is why they need uh regulation. They do shit like this all the time. And the CEO of the largest bank in the United States comes out and says the same thing. Fucking babies. Insane. Just don't understand why they need special treatment. They didn't even ask for this back last year. The Fed just gave it to them. They gave them free reign. They didn't even ask for it. They were given a gift. Still complain about it. Insane. Literally insane. We'll see how it changes because it does affect. It does like fuck with things, and we saw a lot of things change last week because of that. So we'll see how much they keep fucking with yields. Nothing really today. Nothing really today. Came under 1.7 on the 10-year. Again, I think the most important one to be looking at is the shorter term. It's so silly because I talked about how the 2-year seems to be where the Fed's going to be more sensitive and where there's going to be more sensitivity around the 2-year and sort of the short-term look. And now all of a sudden, oh, well, yeah, the 2-year. Like, I don't know where. I mean, obviously we all have the same information and we all come to the same conclusions, but it's now everyone's agreeing with it. So we'll see how that changes things because I thought I was being a little out of the box by thinking that, and now all of a sudden everyone is like saying the same thing, that the 2-year is going to be where the decisions are made from, and like the sensitive spot where the Fed will react and interact with interest rates based on that short term. So that's where now institutions are fucking with the 2-year the most, which is the problem. It was the 10-year, and if the 10-year yield is rising, then the Fed will need to think about interest rates based on that. But now it's the fucking 2-year, and so you're going to get all of these mongoloids that as soon as they have a problem and they want the Fed to do something, they'll start to fuck with the 2-year. You know what the Fed's going to do? So again, those my ex-girlfriend works at the New York Fed. So I was just talking to her over the weekend, and so I was talking about the 2-year. And so again, if the yield gets going too high, then the Fed needs to increase interest rates. That's like sort of like the very simplified version. But they look at the 10-year as like one of the more influential areas of this. And so like I talked about last week, I think the 2-year is going to be where they're going to be the most sensitive, because they're sensitive in the now, knowing that they can handle the future through policy. And so I was talking to her about it, and that's literally what they're looking at. And the thing though is, what if the 2-year, if the market starts to sell it off because they want to be a fucking dick and try to get the bond villain, that whole idea of bond villains and the market trying to dictate the Fed. You're talking about they could literally just start to buy it. Instead of supplying liquidity by just selling it, they could quite literally just buy it. And they'll just start to put the 2-year onto their balance sheet and basically give a middle finger to Wall Street that wants to then try to interact with the yield. And by buying it, it's still providing liquidity, because if the market's selling it, they need someone to sell it to. So if the Fed's buying it and selling it at the same time, they're literally just providing liquidity on both sides. And so they have, again, the Fed is fucking, when we say omnipotent Fed and QE infinity, it's fucking reality. Those fuckers can do literally anything. They dictate everything, can control everything. The market is so silly. Like, where it used to be that you could dictate something, they ain't gonna do shit. The Fed's willing to do anything. Literally willing to do anything. Fucking sell all your treasuries all you want. You're hurting, you're trying to help yourselves, but you're hurting yourselves at the same time, because you know you're gonna buy them back anyway. Like we just saw with all the auctions. Look at how much of a pussy they are. They sold all those treasuries, and yet every time the auction comes back, they buy everything at the auction, because they're such, they literally don't know any different. They did it once where they didn't buy at the auction, and then they sold all their treasuries, and now they're just buying it back at a higher fucking price. Dumbasses. Fucking babies. And they're gonna all buy back anyway. But like where the banks are right now, the reason I'm talking about this is because you can see it in relation to where prices are. The price is right here because of what I'm talking about right now. That's like this. That's where the gap came from. This sort of news oriented, in the banks themselves. You know what they're gonna do though? What do you think is gonna happen over here? They're allowed to do buybacks still, right? They're gonna just fucking buy back. That's literally all they're going to do. They're gonna do buybacks at a cheaper price. They didn't buy back over here to then let it come down. No, they want their prices to go up so they can raise some goddamn capital. They make it a little too obvious sometimes. When the CEO of the largest bank in the country goes into an interview and it says we're not going to accept people's deposits, I think obviously that exaggeration is exactly what we expect it to be. A little too obvious. Cute though. Cute. UMC is going. It's through 864, and it's exactly what we fucking wanted. This is a great move here. This is the side that we wanted on the growth angle, because it is a sector that we were so bullish on before. I mean, think about kind of the shit we did with some of these moves in here. This was kind of moving against some of the other growth when we took it, because they were sort of moving on a more value-oriented angle because of supply. There's obviously a lot of shit going on with the chip side, right? Even automobiles can't be built because they don't have enough supply of chips and shit, right? So the semiconductor side is even having a moment right now, and that's where some of this distribution and everything stuff is coming from. And I don't know why we're having such a moment with it, but there's some supply constraints, and it does cause price to go up. Like that will just like it will cause prices. The thing to think about here, and it is a little fundamental in nature, but it's how we're kind of technically timing it. If right now there's supply constraints on the semiconductor side, like for chips, for anything, for any company to build anything, and there's supply constraints on the chip side, so semiconductors just have a supply issue, what's going to happen? Prices are going to go up. But is demand going to go down because price went up? No. It's the same demand. They just are waiting. They're literally waiting for the chips, and they're going to have to pay more for them. So this is an example of when we talk about elasticity, price is going to go up because, again, there's been such a removal of supply, but demand stays the same. And so the quantity is going to be basically the same, and prices up, which means this is the same situation where prices are going to be up on the semiconductor side in relation, right? It's almost like a derivative of a derivative, and then we trade the derivative of that with the options, right? And based on what we've seen so far, everyone's betting on the same thing, but preempted it a little bit. Oh, Chewy. See ya. Again, all these charts, guys. All these charts. Double bottoms. A lot of double bottoms this week. We'll take them. Very good. I mean, we've put a lot of points on so far. Let's see what these. We'll see what the losing volume move looks like. Coming into lunch, swing back and forth. Again, holding lows means continued upside. Just trending. That's a little. That's just gravitating to the level up here. So again, we have all these. You have all these buyers, or I guess really all the sellers, all sitting right here at 320 on the Q. So tech is sort of gravitating towards that idea. I mean, most charts have that. Most charts have this supply above it, so gravitating there. That pull. We'll see if the rest of the side, again, small caps getting beat up over here. It's to be expected. And I'm not really looking to buy on this support. It's not the same thing, but I mean, it might turn into it if it comes down into this low. We'll see if that. I don't really want to buy that at. I'm not going to like buy this today. That's what I'm saying. So tomorrow, if there's an opening buy on support, then absolutely. That daily candle pulling into support and then the daily candle buying on support, that's what we're looking for, not the opposite. That's why we're trading through this angle right now. Again, timing. Some of those trades on that value side are not ready now. We went long, took profit. Now we're waiting to go long again. We don't know exactly the timing. We know where though. The eye continues. Yeah, there's just nothing that can be done here on Tesla. Problem is that to line up this trade, we need the arc flow. Let me just type it. We need the arc flow, which we're not seeing yet. This here is not good. This is not the inflow. Because again, if you just look at the average on the NASDAQ, it just trended towards the upside with an inflow. This had take profit because of the way it opened. Not compare the two. See? Completely, it's not beating the average. It's not good. In a flow basis, it opened up higher, but that's not true price. Not to say that you can't take very short term, like day trades, and possibly turn it into a swing trade on some of those. But if I'm gonna buy something like if I'm going that deep into growth, like something like Tesla's like some deep fucking growth. If I'm taking that, I'm not taking the trade for today. If I'm buying that, that's to push it for like 2 weeks. I'm not, again, when you take a trade like that, it, it needs to, like, you at least are going to need to hold it for a few days to get some points out of that for the cost, right? So at the moment, you don't have it, right? It doesn't mean you can't go take some random, short term out of the money trade. Those of you that love that shit, but you gotta love it. Look at those fucking options doing their work. Look at the options doing their work. Disgusting. All those weeklies. Silly. Silly, silly. Don't bet against it. Don't bet against it. Oh, Microsoft looking to get through its trend up here. See what that move looks like. Excited for that one. Excited for that one. And that's part of our Dow play. So again, Apple and Microsoft are two Dow constituents doing very well today. Want to take a look at the others? Google. Down 14 basis points. Good thing we're not in Google. Facebook. Up. Obviously looking a lot different because it's been putting points on already. 1.25% so far today. This is a great trade from over here. I mean, it's coming off the level pretty well. I mean, we are on a sharper trend than I have on the target. It's coming off of this trend here. Right? It's coming off of this trend here. Just a continuation from the move that it was on from the last pullback. We'll see. But if everything's climbing together, everything's going to climb together. I do love Z down here again. Great spot. Viacom continuing. I mean, I like Zoom, obviously. We get destroyed by yields over here. Not we, it got destroyed by yields over here. But this is a great move here. So again, expecting further upside. Am I going to bet against this? No. Was terrible, terrible, terrible. Got this move here, and then yields happened. NASDAQ came down. Got tied to the average. It was not part of the average at all over here, if you remember. So same thing can apply here. We get a breakout of a double bottom here. Can trade with the market, but also put its own velocity on. Again, we'll take the trades as they come. Take them. Some of these Chinese tickers look great. They got further tightened coming into this week, which is interesting. We can actually go take a look at the Hang Seng. Very sort of. It's almost like a waiting candle for us today. And so if you think about where this is likely going to be tomorrow, it's likely going to be up considerably tomorrow, reacting to also our market. This was like a pause day waiting for us because, again, this specifically, Hong Kong specifically, is very tied into U.S. Treasuries. They're all just U.S. They're like the currency market of the world in Hong Kong. So the Hang Seng operates around that a lot. And a lot of their risk is based off of, again, us. So this is almost like a waiting candle. And also this is pretty bullish for an upside move, I would say. This tightening. And I love the way that looks. So I would expect this to be up tomorrow. So again, take that into consideration with those Chinese companies on the tech side, right? They're all tech companies. This is all tech. If growth is going to be coming off of its low, and at least the market looks risk on, and these are going to go, this is gonna put the points on, right? Which means those Chinese companies look good. And I traded Baba off the low. I mean, you can take a look at it now. Yeah, it's down right now, but does this mean you have to get out? We took this trade over here. Are we going to get out of it here? No. I expect this to be up tomorrow. This is reacting to where it is on the Hang Seng, right? Which, yeah, it was down today, but I expect all of this shit to come off here this week. I do. So we're in those trades. We're taking them. We'll see how that market reacts to us. It does not lead. It was leading, but it then had to react to our yields because again, every single market in the world is tied to fucking the US dollar, into our treasuries, in the fucking our Fed, right? So they all react to our market, and today was questionable. There was a lot of that's the reason I had such a spiel today was because there's plenty of worry that we're actually going to turn into some sort of downturn or something overall, right? Where growth isn't even doing well. Growth has been doing poorly for over a month, right? Value's been going up so much, and now it's like, well, has that been a hedge the whole time against everything that could happen? Wait, we were making money because we were being fearful? No. We'll see how these do. Let's see. Okay, when do I take this trade? When is the actual number? Maybe you should just fucking do it. There is no level there. It's just a trend line. Mhm. When did it rejoin the average? Not a part of the average right now. Or maybe it is. Um, I just like all the other buys so much more. All these support buys we just got on some of these growth tickers are just so much better than this. I feel like they're just so much weighing down this ticker. And I just don't like the flow on the ARC side, which is literally this whole fucking ticker at this point. Uh, uh the only thing the problem is we don't have a downtrend. It's sort of a mixed bag of shit here. This is not even doable because the trend doesn't line up. But this is this would be the trend that I would look at. Can't do it here though. Can't do it here yet. 26. This transition. This is transition point on RDUS. Take profit. Get out of there. Get out, get out, get out. Okay. Be an interesting lunch. It should be interesting lunch if anything with yields. That looks pretty good. That looks pretty good. Okay, coming up to the level. This means we're gonna bonk our head at the start of lunch, which is likely going to be a pullback lunch. So pullback lunch on tech, possibly melt up lunch on individual tickers that are coming from the lows, those double bottom looking charts, and then likely melt up lunch on the value side as tech has its pullback during lunch because it's already up so much. Those ideas make sense. Okay. Makes sense. Don't expect anything yield wise today. And I also think that they're just gonna fucking stop eventually. Like that it's the reality that um that again, the economy is gonna be booming. You can call it rebounding, but it's just gonna be booming. These things are gonna fucking happen. Spending is gonna happen. The Fed's gonna keep doing what it's doing. Government's gonna keep doing what it's doing. Which means again, those things are just gonna be there. The base has changed. The baseline has changed. That's it. So I don't expect like these days where banks just sell off a shit ton of treasuries to be little bitches. I don't expect that to happen much anymore. They tried it, nothing really happened. They've complained as much as they can. Um, I don't see that like hurting. I don't see the equity market getting hurt as much as it has been in the last couple of weeks due to yields anymore. Because again, you can only have you know a hissy fit so many times before it just okay didn't work, so I'm just gonna stop. I kind of think that's where we're at. I don't really think it's going to happen anymore in the same way that it has, right? It might come up every now and then based on flows and everything, but nothing that we haven't seen before. But Don, what about the fact that Biden is likely going to tax the rich? Does that mean they're going to take profits in the market? Maybe. Maybe we should all just take profit because our taxes are going to go up. That makes fucking sense. Yeah, Nvidia is looking pretty good. Definitely looks pretty good. The chart did have a lot more supply. Chart did have a lot more supply. And breaking through that means a lot more than some of these other charts. So feeling pretty good about this one. These charts turn into, again, they're not really double bottoms. A little bit more of like a bottom triangle going from this downtrend. If it were to make a move, otherwise it's not really anything. It's just the fact that we're buying from we're buying on basically this reversal and some of the flow ideas that are coming in and just good price points. I mean, again, there's certainly this turn and reversal and some sort of breakout, but not all of them are going to have true patterns. Because I mean, some charts were just kind of hanging out in the middle of fucking nowhere, getting hit by supply like this, and then all of a sudden it's like, oh, okay, we're risk on. We're risk on. So time to go the other way. Which happens, because again, everyone in growth, everyone got sold all this growth. No one wants to be a part of it, and then all of a sudden, we have the 4% Nasdaq day, which gives us a good low point. What's great is we have a really true low. We have a true low because we got a 4% Nasdaq day, and then yields fucked with us. So again, the price sucks over here. A lot of the price movement sucks, but I think mentality-wise, everyone aged up a few years over the weekend. Roku, SPWR. Yep, those two are very good as well. The Roku buy from the low, I think, is a very important one. To recognize this move and also to recognize how you're going to push this trade. You know what's really hard is this is like what I was just joking about with like, oh, if they're going to raise my taxes, I'm going to sell all of my investments in the market because they're going to raise my taxes. But think about it. By not having your money in the market working for you, think about all the gains you're going to miss, and then you're going to have to put those back in, and it just causes problems. There's risks involved with trying to get back in. Trying to time the market like that is terrible. Just being in is so much easier and so much more profitable, right? Just so much more profitable. The market just goes up in the long term. So trying to short term time everything just sucks. Not gonna be very good. Yeah, we'll see how this sector moves. Again, it's sort of consolidating in the same way that we see tech consolidating. This move over here, the difference being that it has an uptrend, which makes it more bullish, right? Think about this move from here. This move here, this looks like the rest of the growth market, but the difference is this uptrend. Tech has a downtrend. So it just makes it overall more bullish. Continuation, the other's a bottom, right? Doesn't mean you can't get more gains on the other side, which is why we're trying to take those trades if they are going to be risk on, but and that looks pretty good right there. We're buying a lot of lows. That's quite the spot right there. Kind of makes me think of the end of last year a little bit around the election. This position here, but it's just the market in general. Remind me a little bit of last year when we were going through September through October, I mean, I know it always feels the same way, but it does look the same in a lot of ways, but for different reasons, but also mathematically very much the same. We did a lot of hedging going into the presidential election. That volatility in the price movement that we saw can be very can on a quantitative level and based on the charts be very similar to the way that we've reacted to yields in the way that the economy started to boom and discount some future on growth. I mean, they're kind of similar. Kind of similar. These two things right here. It's, I mean, this is obviously more hedging. Like we hedged into the election, right? This is obviously a lot more. You can just see it with the candles. I mean, it's just way too clear. We knew that's what was happening. This was all hedging going into the presidential election, but a lot of it is very much the same based on what happened in September over here. We're in a very similar spot, and that's again why I'm taking this moment here to, yes, this shit sucked. And I kept talking about last week sucking, don't take the trade, don't take the trade. But coming into this week, we've had multiple weeks now of yield fuckery and sort of rotated as much as we can into value. We rotated to the point where now what is value? It would need to be a momentum trade. We talked about that, right? A lot of them reached their retracement points, which is we captured all of it. Now we're at the sort of the fork in the road again. A little bit of a fork in the road. I think we're gonna get some moves. Hmm. What is this? What was going on over there? Tariffs. What is this? Where is Tariff Man? What was the Tariff Man day? It's February. Tariff Man. What did we get in March? March we got Tariff Man 2.0. Never forget Tariff Man. What happened over here? We had oh yeah, and then we had that fucking remember December 2018? Fuck me. That shit blew. December was terrible. Fucking fuck that December. Holy shit. Just fucking tariff man, right? December 2018, we lost like 20%. Like fucking 20%. And people want to act like we're having a pullback right now. You know what happened in December 2018 in 1 month? 20% loss. That shit sucked. No predicting that one. Thank God we're in simpler times. I think we're gonna use this channel here. I think we're gonna use it. Uh, I think we can use it. This is yields. Everything else react well. I think the top works here. This is the overextension from going into September, and then we sold through. Makes sense. Top up here, dojied through it. The wick touches, averages. This is how it is on the Qs. Again, this is I'm literally just drawing the trend line from the average, but Apple is a little bit more beat up. I bring it over here, take a look. The angle is just a little different. That's all. And again, it's the difference is that the average continued to do well. Apple, the chart's down here and shit. And fucking all this is fucking all down here and it all messed up, but the same trend line idea. It's just a different schedule, right? Different schedule. And this is gonna stop. I mean, let's just be honest. If we're risk on, the market goes up. We're gonna go to all-time high on the Nasdaq, right? It's going to happen. All of the indices are at the all-time high. The Nasdaq is going to get there, which means it's going to climb up here. It's going to be probably this trend here. That's the old inbound trend, which would mean that the biggest ticker there is Apple, the big boy in the room. Which would, if Apple's going to go to all-time high, it needs to break this fucking point here, which is what? It's going to come up. Going to come up here. All right. It's 20%. It's 20%. I want also to think about a little bit. I don't know where the trend lines went, but we just had them. The play over here that I made back on this day here, I took a straddle, right? So I took a straddle that was either going to go all-time high or come down. It's literally coming down directly to here, but I actually don't know where the chart went. I have no idea where the chart went, but you guys saw it. You guys know what I'm talking about. You can go look on the recording from Friday, whatever. And so I took a straddle. I said, we're going to get more volatility than this. So either up here or down here, taking a straddle. We obviously got paid on the short side, for volatility. But even here, if you think about what was going on and even the way I remember my own dialogue, you think about the support in here and how just beat up and gross this was for so long, while the rest of the market was going all-time high, mind you, or like heading towards all-time high, value looking great. The market, I mean, just risk on. Tech got beat up more as it turned into value, right? But even here, I wasn't confident enough just to short it. I went straddled it because I thought that there was a chance of going long here to all-time high. This point here, I'm not doing a straddle. I'm not going to short this. So here, I had to take a straddle because I don't know. I know there's movement, but I don't know if it's up or down. Still made 300%. Here, going fucking long. Why? Because I don't fucking expect to go. What am I going to bet against this right here? You're insane. You're literally insane. I'm not going to bet beating a low down here. It's just like, I don't know. Like, what am I going to... no. Now the timing hasn't been good over here, and for good reason we didn't go long over here, right? Good thing we kept shorting Tesla and shorting this shit and didn't go long on it. Absolutely. But time has gone by. Time has gone by. We've gotten through a lot of this yield stuff. It's insane. I mean, just insane. Look at this. We lost 3% over here on just Thursday. 3.5% on Thursday. Again on yields. Look at this shit. And 4% on the Nasdaq on this day. That shit is just fucked. Like, it's beyond fucked. Some of this price movement. We have to get out of here. And you know why I think we're gonna get out of here? And now, don't do it. But don't do it. But think about how gross this is in here and just nasty. And we have to get out of here, right? We have to get out of this spot and remove ourselves from here because the supply is bad. It's bad supply because we've done bad things. Bad trading. 4% Nasdaq. reacting to yields every single day, overreacting, overselling yields, which is bullshit. So this is bad supply, not good levels. You know what? Where we've also done that? This in here is bad. Look at this stuff. Look at this price movement. What the fuck is that? What is that? That's just bad. We have to get out of here. Where are we going to get? How are we going to get out of here? We have to go this way. You have to go this way. You can't go down this way because then you'll have to deal with it again. Go this way. Get the fuck out of there. That's just bad. Bad, bad, bad. Terrible. I mean, this was terrible too. Get out of there. Get out and go the other way. Markets want to go up. They're going to go up. Risk on. Now, this was just bad, 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 and we got absolutely paid. Absolutely paid here, and this is even going, and this is what I like a lot right now is that as I go and try to make some of these low buys on the growth side and take that fucking opportunity to go push to all-time high on those charts, just like we did here, having this trade still gives so much protection on that trade that I feel okay taking the trade because this is paid. If we didn't get paid on this, and this did not turn out right and it wasn't successful, the value trade itself, if the value trade was not so successful, I would very likely not look at the growth side as unbiasedly as I am now and sort of critically and saying, okay, there's an opportunity here. I probably wouldn't say that and take those trades. I wouldn't think there's opportunity there because it just looks so bad. Like it just chart-wise, it looks terrible. And if we're chart traders and that's our method, then we probably don't take those trades, but we need to also open up to some of the things that have been happening and some of the dialogue I talked about this morning where it's likely to be different because of some big fucking reasons, right? Some big sort of big brain out of the box reasons. This really helps that other side. Because if this can do well here, the Dow's been pushing all-time high for fucking a month. It's been all-time high for over a month. Well, way over a month now, but this trade has been doing great. Tech has been beat the turd. Terrible. Terrible, right? While the rest has just been trending up. Like we had this uptrend on tech, right? Coming from the election as well, right? But then it stopped while value just kept going, right? Value just kept going. Now we're trying to get this to catch it back up there, and we'll take both. They might converge a little bit. We'll see. But I feel good about. We took a lot of these trades on Friday. We took a lot of them on Friday. I feel very good about the more that I added today than the rationale we've had today. I feel fine with that. I mean, a lot of these charts really, some of these from last week, I think, again, good confirmation that, you know, you take a trade like this, it doesn't need to gap up like this, but I think you get good confirmation, and I do think that it's enough to make the other trades, right? Now, like things like Tesla here, like I can't take this trade, just can't, it's not the same is in timing, where what the difference between taking sort of these other trades is that the timing doesn't matter. The timing literally doesn't matter. The only thing that matters is that it's probably going to fucking go up, right? And so at least we've got in at the low, and there's not like a worry that there's going to be downside. It just feels like we're at the low, and that's where it's going to be. And so the timing, we might be in it for a few days and nothing happens, but we're not really at risk. That's a good trade because you don't have a downside risk, but you have a lot of fucking upside. The problem with Tesla here is that, yeah, there's a lot of upside. Yeah, I expect it to go up, of course. I'm a fanboy just as much. But I also know when. I know that there's so much more timing involved here. You can't just buy this and say, oh, it's going to go up later. Because during the meantime, you can get fucked back and forth before you actually get what you want. Just like we've seen before, I took this trade right over here, and then, you know, we get this day and then immediately got whacked, right? Immediately got whacked. And it's like the same thing applies. It's like this gap up today, if the gap up did not happen today, then I would take the trade down here. If the gap up didn't happen and it opened like any of these other candles, I would have taken the trade here. But since it's here, I'm not going to take the trade there because it's probably going to come fucking down tomorrow. It's probably going to come down tomorrow at a lower point. Do I think Apple's going to come down tomorrow? Probably, but not lower than the low, not lower than my entry. Here, if I enter it, I'm probably going to lose money. I'll just wait. What am I? There's not enough liquidity. It's the 5th biggest company in the world. Or I mean in the fucking US exchanges at least. I'll take it tomorrow or the next day. Maybe next week. Maybe Kathy will up her target to 10,000. Who fucking knows? But it doesn't help. That's for sure. Like it again, I don't know what the point is because again, it stops movement. If she didn't say anything, this would have been here, but guess what? It would have opened down here. Imagine if this chart opened at 655 and then moved up to where it is now at like 690. That's a completely different scenario. Completely different. That'd be momentum. And again, that's the difference. That's literally the difference. Look at this. That candle right there is the same as what you see Tesla there. Tesla's in the same spot, but it gapped there. This is momentum. This is strength. That gives confidence to me that this is the right thing to do. You know, again, I think it's important to see the difference between those things and see how using opportunity cost and risk reward, you can kind of pinpoint when and where you should be. And yeah, both of them have the same, they both have the same sort of end game scenario, but in the present term, it's hard to make that decision in that moment and try to time it like that. It's not good timing. Here, I don't give a fuck about timing. Buy it at open. Say fuck it. I'm not gonna get lower than this. Sue me. But yeah, the other ones, it's hard to, and that's again where if you take a day off or you take money out and then you're like waiting, all the points that you're missing are gonna continue to hurt you, right? And now I understand that with Tesla. Like if Tesla's up tomorrow, then I'm now going to be buying at a different point. But that's why I bought other things, right? I bought other things. It's not like I don't have any of my money. I have all my monies in the market. I'm actually levered up a little bit right now. Like I'm actually margined out of my mind. No calls, please. No margin calls. Who's calling? Someone named Margin? Oh, hell no. Hang up the phone. Hang it up. We'll see. We'll see. Doesn't need to happen. And I think a lot of my understanding stands still from the last few weeks. It's just not as good. But again, getting in from the ground sounds pretty good to me. Sounds pretty good to me. I mean, it's certainly going to take some demand away. We've already seen this, where the days like today where things become possible. There's new possibilities. That demand will take away from some ideas that have already been working and slower moving, which we've seen. It'll continue to happen, right? Money can't, I mean, not everything can get driven up at the same time. That's for sure. This is just significant inflow overall, which I do expect, but not everything is going to rise equally. Pick our spots. Got a long way to go. The year just started, folks. The year just started. Got all year. And guess what? Then you got a year after that. And a year after that. You guys got plenty of time. Enjoy each day. Don't make money today? Don't worry about it. You got a lot of time, friend. Got a lot of time. Just wait for the next correction and buy at the bottom. Right? You could just be a correction buyer. Couple corrections every year. Just wait for the 10%, the minus 10% to come in. Go buy it. That's it. You could do that. You'd make 100% on each of those trades. You make 10 trades a year. That's it. You just put all your money into each of those trades. Well, maybe two of them don't pay. All right. The other 8 do. I mean, I told you before, all the gains, all of the price changes that happen in after hours and pre-market. Quite literally, at the end of every single day, right at, like, let's say 3:55, 5 minutes to go, you could put trades on and take profit at open. You can do that. That's why there's so much volume at close. You can put all your trades on right at close and take profit in the morning at open. You could do that every single day and you'll make money. I guarantee it. Every single day you could do that. Put trades on it at night or in the afternoon, right before close, and take profit at open. Every single day, if you did that, go back test it. You would be up year over year. Market keeps going up, price keeps increasing in after hours. Not going to change. Always going to be like that. Go look at the candles. This is all after hours action. All this movement, look at the open, 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 open. See all that? Now, I want to make a little bit better return than that. So I'll swing it over multiple days and pick my timing a little bit more. But you could simplify it that much. Which algos do. There's plenty of people doing that. Plenty of algorithms doing that. I mean, look at fucking pensions. Pensions just keep adding. Gonna be fun. Going to be fun. Are we doing it? Are we doing it? Can't believe this all happened in the day. This chart offers so many opportunities. Insane. This chart offers so many opportunities. Look at this. This was today. Just intraday. Huh. I mean, there's just so many opportunities on this chart. It's insane. I don't know why it swings so much intraday. Beautiful. Okay, this thing keeps going too. Yeah, all of these charts like this. All of them. Fucking all of them. This is so much lower though too. Oof. There's so many points to get here to get back up into the range. I mean, this is gross. Gross. But again, charts that don't really, I don't see much upside here in the sense of like breaking the resistance here, but you can swing it from the low to the high each time, right? Look at this thing swing back and forth. There's charts where you can do that and just trade between the swings. Just trade between the levels. Sometimes it's angled a little bit, not fully horizontal, but silly trades. Silly. TSM, what are we going to get? 126 by this week? delete this trend line now. This came down so much. This came down so much, and the see ya. We'll see. Okay, I think it's time. It's time. Not seeing much. Let's take a break for lunch. This is interesting. Are we getting long positions added? I think we're going to get paid, folks. It would be nice to be able to push this the entire week. Into next week. In the week after that. So I think the thing to do... I think what I'm going to do on all these trades that I entered today, not specifically the ones that I entered last week on the growth side, so things that I entered Friday, something like ZI or something, right? That's probably going to be take profit tomorrow or something. Any trades that I sort of entered today that I'm trying to buy the low and just have an expectation that the market's going to be risk on, everything will continue to trend up, right? These big tech companies will go back to all-time high, even though they've been fucked up. There might be some sensitivity still to yields, but not as bad. I'm going to just get stopped out on them. If they don't keep going, then I'll just let myself get stopped out. Say fuck it. I'm not going to... I think... I'm not going to try to take profit on this. I'm not going to try to do anything. Once it gets to a point where, you know, it doesn't seem like much more can be pushed out of the trend, which will be like some sort of risk-reward period of understanding that things are now swinging back down, take profit. I'm not talking like 2 daily candles, pull back. I'm talking like some sort of actual reversal of the entire market. Then I'm just going to push these until I get stopped out at my entry point from open today. Fuck it. So, good luck, folks. Stop outs only. Not taking profit on this for weeks. I'm letting this shit go all-time high, or I'm getting stopped out. So, even if I get 200% and it then goes to zero because it's not at a point where I expect it to go further, fuck it. That's what I'm doing. You can hold me to it. I'll talk about it every day. So, all-time high or stop. I'm in a mix of everything. So, okay, maybe I should rephrase that. So, I'm in a mix. I'm in a mix as always. The short, like April's will have to be more sensitive than June's. April, May, June, all three of those from at the money and some out of the monies are all going to be interacting differently. June's, for instance, do have some June's. June's are probably the best example of what I just said, right? The best example of what I just said. April's, okay. April, I'm going to still play, and if I get a few 100%, I'm not going to go, oh, I'm going to lose it all on purpose. Oh. I don't mean it like that. I don't literally mean that I go 100% or stop out. Like, I don't literally mean that. Just an FYI for some of you, because I think you actually think I mean that when I say, if I don't get 100%, I'll get stopped out. Yes, that's the fucking goal. But if my rules still come in that price is reversed, then I'll take profit, right? So I don't literally mean that I'll just get stopped out, right? I'm not going to lose money. But I do mean that I'm not going to be sensitive. I'm going to let this shit do whatever it wants. And if tomorrow it takes profit, you know, by 1.5%, I'm going to hold it. If the next day it sits there again and doesn't move, I'm going to hold it until I get stopped out on the options. That's what I mean. I don't mean like, if eventually I need to take profit, I will, but I'm not going to, in the very beginning periods of it, I'm going to let it keep going. Let it work its magic and build upon it. And, you know, if in 2 weeks nothing's happening, I'll take profit, right? But just during like this week, I'm going to let it really make room for it, let it work, and see if we can get some demand in there. Again, we're trying to buy something at a low value and turn it into higher value. And by buying it, we're trying to convince the rest of the market it has higher value than it has right now, right? And I think there's a lot of the thing to remember here is that through all those March monthlies, we didn't really get a gamma squeeze because of the yields and the way that price action worked. So the gamma never really got going. We never got moving in one direction, that the acceleration actually continued. We actually kept losing momentum, which causes the whole idea of a gamma squeeze not to ever happen. So we never saw it on the tech side. If this starts to get going, that's going to come back into play, and we're going to get squeezed out of our fucking mind, like what we saw in value, right? Or everyone's favorite WBA play, artificial gamma squeeze. So again, that shit can happen. Gamma out of my mind, exactly, Brian. So, but again, it needs constant movement. If it's not accelerating and continuing it, then it will never happen. It's when that does happen, market makers start buying the underlying more and more, and they can't sell it because they need to stay hedged. This could be the start of that we didn't see in March. And again, April will have the most contracts ever again, just like March did. So again, planning for that idea. So things look very good here. I think it's a good way to good spot to end it here. Take a break for lunch. Keep these ideas in mind and maybe look to reset a little bit from what we went over in the last month or so. I'm not saying value is please. I'm not saying value's dead, guys. I'm just taking the opportunities that are also in front of us right now. Okay, I love the value trade still. I'm still doing Dow 34,000 by April, absolutely. So please don't remove that. Now there's like a coming and going of energy right now. Banks are being babies and reacting. Those are different things that we have to react in the moment, right? Takes away from a little bit of the timing. I'm not, by making growth trades, taking away from that. I'm quite literally just saying all of equities are risk on. All equities are going to climb. Okay? That's all I'm saying. Before, yeah, there was really only value trades. That was the way the market is. Right now, all equities are risk on. I expect upside everywhere. So keep that as the takeaway. Okay? Enjoy your lunch, drink some water, get some exercise, do something, fix your posture. I'll see you guys this afternoon for close. There's going to be more trades. There's going to be more trades during lunch, so I'm going to be here trading. So Neo is definitely, I definitely take over Tesla at the moment for that like China angle. This tightening I do like. Where are my trend lines going on all these charts? I'm gonna have to figure out what happened to the layout. I do like where this is here. If you think about the supply in here, there's a ton of supply in here, and if we think to some of the other trades where price is working through the supply, as soon as it breaks out of this like this kind of nightmare zone, it's going to take off because there's no supply up here. Think about how quickly price moved through here. That's because there's no supply, right? So price moved here quickly, price moved down through here quickly. There's no supply. So as soon as it breaks through here, it would put some moves. Should you preempt this trade? There's probably going to be a few ways to do it. We're betting on everything to go up. Yes, I expect this to go up, but is it the best time to take this trade right now? I would take it over Tesla at the moment, but I would take both of them. Just, I don't know if I want to take it right this moment. Maybe by close, I'll change my mind and I'll be like, yes. So you can take that with however you want, but yes, I do like it. Yes, I do expect upside. I think it moves with the rest of the market. It just seems like EVs are they're not getting the flow that the rest, this is well below the average, right? Well below the average. But maybe because of that, we can also look at it as, okay, it's maybe being discounted when it shouldn't be, right? I don't know. It's just not. Okay, that's pretty nice intraday movement, but yeah, it's just so much supply. That's the reality. There's just so much supply. Once it starts to move through it, it's gonna fucking explode. I would say that. So, if during lunch it started to melt up and looked like a chance, then I would take it. Yeah. buy close if it's there. Yeah. And Neo has the benefit of being China bullish. So again, I expect Hang Seng to be up tomorrow. Chinese companies to be up tomorrow. So use that as an opportunity. So maybe this is a chance to get this tomorrow. The difference, though, here's the last thing I'll leave you with. If today tech has a big day, what's going to happen tomorrow? It's going to fucking take profit. So if these charts don't move at all today, I'm going to wait for tomorrow because the whole market will take profit on the big move. So if something is below the average, wait till tomorrow to buy it because tech will take profit off of its big move tomorrow, right? Keep that idea in mind. No, it doesn't have to. It's not absolute, but keep that in mind that if we have a big fucking day on the NASDAQ and in the market, it's likely going to have a stop day tomorrow, which will let you just buy this the next day because look how it's break even on the day, right? NASDAQ's 2%. This is break even, well below the average. You can just wait tomorrow when the NASDAQ takes profit to go buy this at an even lower point. So keep that in mind. That's what I'm keeping in mind with Tesla is that since it gapped, it's probably going to come back down a little tomorrow. Now, if it doesn't, then it would be more bullish, and I would look to take it and actually fuck me. Okay. Oh, okay. Okay. Well, this discussion ended very abruptly. Yeah, fuck me. I'm gonna just buy all this shit. So, good luck, guys. I'm just gonna buy everything. I said I was gonna buy everything, and I was gonna try to wait on EVs, but fuck me. I guess we're doing this. So, remove the EV discussion. Remove the ED discussion, and like I said, it opened. Just buy everything, right? Just buy everything. We're risk on equities. I was trying to make an argument that EVs were behind, but I mean, let's incorporate EVs into the discussion because they are the fucking market as well. Okay. Some of you guys are going to get really sad when there's a pullback for lunch and you take what I just said as like, oh, I should buy a rate this second, but you guys are fucking stupid. So whatever. I'm just kidding. You guys are great. But guys, there's this thing called lunch and things will pull back for lunch. So like I just said, just buy it like at the low of lunch. Okay. I will see you guys this afternoon. Enjoy.